I'm Matt Bichard here in NAREIT's Washington, D.C. headquarters. Joining me today is Sunny Misser, CEO of Accountability. Sunny, thanks so much for joining us.
Well, thank you for having me, Matt. And, it's great to be back. I guess it's been a couple of years since we met last, and you look great, and I've gone gray. But it's great to be here.
Now, speaking of the last time we talked, we ended that conversation with you making some predictions about consolidation, industry specialization, and increased enforcement of sustainability standards. So now with the benefit of hindsight, how do those predictions hold up?
When you talk about consolidation, there are 3 or 4 large players that have come to dominate the marketplace, perhaps 4 to 5. Now, whether one of them changes or a new one emerges, the number is going to get smaller. So when we spoke last, we had mentioned SASB. SASB is clearly a dominant player in the marketplace. You have the ISOs of the world, the GRIs, and TCFD has come up as another player. So that's clearly something that is happening. I think the second thing we had spoken about, Matt, was the need for an industry specialization or a focus on industry. And that focus aspect is more evident than ever. While we have specific standards in financial services, oil and gas, clearly in real estate, you're seeing more of the broad spectrum standards, such as SASB. For example, in 2018, as a multi-purpose, multi-use standard, SASB had 11 specific industry supplements for the industry. I think GRESB has seen a rise of about 16.5% in terms of assets participating in the last 2 years. So it's clearly going towards an industry focus with a broad sense of guidance. And on the third point that you had mentioned, I think enforcement could give us an entire session by itself. But just to take a quick look, for example, if you look at the period from 2007, 2008, the financial crisis, to 2010, which is 2017, a 10-year period. During this 10-year period, if you look at financial services from a global lens, can you even estimate what the world's top global banks have paid in terms of fines in the last 10 years?
No, I can't even begin to guess.
Matthew, it's staggering. It's over $320 billion, right? $320 billion. Now, that's real money. I'm talking US dollars, right? And when you look at the counter to that, 50 of the largest banks in the world, as of today, when you look at that same period of time, have actually wiped out over $850 billion of profit, not revenue, profit. And whether it's trading losses, whether it's fines, whether it's write-offs or higher compliance costs. So clearly, there is an impact, and there is an impact whether it's due to enforcement or different regulation, but you're seeing that, and it's coming out of the bottom line.
So those predictions obviously panned out. Now, if I was going to ask you to look in your crystal ball again, what are you seeing going forward?
As you're familiar with the United Nations Sustainable Development Goals, and when you look at the UN SDGs, it has the potential for being a big play. By conservative estimates, it is estimated that the UN SDGs will create a market or a business opportunity of over $12 trillion, right? Now, and $12 trillion by 2030 is a sizable number. In addition to that, they're looking to create 380 million new jobs by the same period of time. And where does this 12 trillion go? It is primarily focused on 4 industries. Energy and materials, cities, food and agriculture, and health and well-being. So when you look at these 4 industry segments, you're looking at humanity, right? So clearly, one of the trends that we are seeing and will see both accelerate and intensify over time is that the corporate commitments or the business commitments to SDGs will get smarter. They'll get more specific, they'll get measurable, they'll have a time limit, But you're going to see also governments putting a lot of pressure on the private sector. You're going to see pressure from industry associations. And actually, you also see a very active engagement from the C-suite.
So drilling down to 2019, what do you see as some of the key sustainability trends we should watch for this year?
One of the biggest trends is around climate action. Right? Industries are going to have multiple types of collaborative linkages, and they're going to see a big spur towards climate action. There are several other trends. We spoke about SDGs and the huge impact SDGs are going to have. There are trends towards supply chain intelligence, both with technology as well as with transparency. There are trends towards automation. There is a huge buzz. How much of it will materialize remains to be seen, of transitioning from a linear to a circular economy, right? And clearly the one and above all trend that you're seeing across all industries, regardless of whether it's sustainability or another area, is around impact. Investors, shareholders, stakeholders are no longer satisfied with just an output set of measures that indicate that there was a process and something happened as a result of the process. They're very much focused on outcomes or impacts.
So Sunny, in your opinion, how and why is it so important for the real estate industry to report and disclose on its environmental, social, and governance sustainability initiatives?
In sheer numbers, the real estate sector contributes over 13.6 to be precise, 13.6% to the overall US GDP. And that's a massive scale. Real estate contributes over 2.3 million full-time jobs towards the U.S. economy. And I'm just talking the U.S. piece. So now if you look at this from a global standpoint and look at the geographic span across industries, across different countries, right, there is both a tremendous opportunity to create value, but also a significantly large exposure to risk. And given those factors, you're going to evoke an intensifying and already increasing scrutiny from both investors, but regulators as well. And given some of these factors, it becomes extremely, the imperative is to disclose on a consistent basis data that is fair, consistent, accurate, and auditable. In fact, there was an interesting statistic: 74% of investors will examine the ESG risks of REITs and their holdings before they choose to invest in them. And I think that's reason enough.
And finally, Sunny, for the past 2 years, accountability has been ranked among the top sustainability management consulting firms by the Financial Times. What advice would you offer a company that's looking to build their sustainability agenda?
There are a few things that we have observed that work better with clients going through large enterprise-wide change efforts. One is making sure that you have the buy-in or the championing at the CEO and the board level, at the top leadership level. There is an endorsement, and it's a serious one. Another one is when engaging in these change efforts, it is not to try and do everything all at once right now. Try to get some early success by doing the smaller, easier stuff first. So get some scores on the board, because that is a self-fulfilling prophecy. I would also say that there is a danger in a top-down approach because sometimes the business units get disconnected from it. So while you have the top-down mandate, get really close to the businesses. And sometimes getting close to the businesses is aligning yourself or bolting on to an existing change effort that's going on that may or may not be directly related to you, but you can pick up on the wake or the momentum of the effort that's going in. Another thing we've noticed is companies tend to get very overambitious. We strongly suggest do 2 to 3 big things and do them well. And once you're done, move to the other 2 or 3. And last but not the least, and this is something I'm sure you would relate to, is creating a compelling story, building a narrative. and telling it. And telling it again and again and again. And communications becomes honest communications becomes a very effective part of this overall equation.
Sunny, thank you so much for joining us.
Well, it's been a pleasure, Matthew, and thank you for having me.
For more information on REITs and ESG, be sure to visit REIT.com.